Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Friday, January 29th. Okay, it's 6:30 as I'm starting the video. And again, we are down by a pretty good margin here this morning. NASDAQ's down 1%. SPY is down about 0.6%, and through this all, the IWM small caps have been relatively stable. They haven't been affected as much by this market turbulence. And the title of my video, as you've already noticed, is Helmets On, Volatility is Back. I think with this, all this crap with the Reddit and the GameStop and short squeezes and all this stuff, it's caused some market turbulence. Not so much from a psychological standpoint, but from a structural standpoint. These hedge funds have got to readjust, degross, do a rethink on their strategies. Vol is back over. We had the spike on Wednesday up to 37. And it backed off yesterday to about 28, I think was the kind of like the low. But now we're back up at 34 here this morning. And that's not a conducive environment for, let's pile in long, right? North of 30 is a big warning flag. Really, even north of 25 is not great for, long exposure. So we have been talking about taking down some of our risk. Now that looked stupid yesterday on the big bounce, right? Because I made note in the trading room, my little watch list and stuff. On Wednesday, names like Freeport McMoRan, all the resource and materials names got killed. They were down, 5-8%. And yesterday it was totally flipped. Everything that got whacked on Wednesday was at the top of the leaderboard yesterday. So this market is really having some turbulence now. And now in the pre-market, although we're rallying at the moment on SPY, we're down here in the 375 area. And, all these toggle points we're off of last night's close. So we're going to, again, open down below. So there'll be a gap above to fill. And you can see the gap below, which was the gap from yesterday morning. So let's see how we open this morning. But my main message is this. I think we're going to be doing some pulling back in the broad averages over the next, week or so. Hard to gauge when. This number here, this was the low, the pre-market low on Wednesday, January 20. It was the low yesterday morning, pre-market, and then they rallied it way up before the open. And this aligns with the 50-day EMA off of the daily chart. I think, I'm going to go out here on a limb with a big prediction. I don't like to do that, but I'm going to in this case because I think it's what's going to happen. I think in the regular session, not the pre-market, in the regular session, I think we are due for a rendezvous with the 50 in the regular session. And then we're really going to find out, where this market is at. Do the bulls hold the line at the 50? Because we have not, I'll have to go check this, but I don't think we've been below the 50 since March. The 50 has contained everything. The dips, I think we had a dip in June that tagged the 50 and we came back. So The 50 will be a real important line in the sand, and I think we hit that during the regular session. This pre-market stuff, I think, is pointing a direction, and I think we're going to go there during the regular session in the days ahead. So I want you to be ready for that. But let's dissect where we're at today and some trading cues, and dissect yesterday's trading to kind of see, how you managed it, if your thinking was aligned with the market. So here we had the open, we gapped up, right? We had our predefined level here at 378. We were looking for a fib bounce. I've taken those fibs off, but we had them on yesterday morning. On the recapture of 378, that was a buy level, and you got some really strong follow through in the hours ahead, and they pushed it all the way up into this gap. They recaptured this channel, but then they ran into a wall right here at 381, and we had a really nasty close where they basically liquidated it back in the final hour, brought it back to 378, and now they closed below it. So today, I think 378 is again a very good pivot point for you to key off of. We're going to open again below, I would imagine. If they come up and recapture it, I think you can be long. But if it stalls here, they open it below, they come up to 378, close that gap, and stall, that's your objective short, right? With a stop just above, and maybe it rolls over to the pre-market lows, which were down here in the 373 area. And remember, let's just run through that scenario. We roll over, we fill this gap, and we come down and test the low of the other day at 373. If we break the prior low, again, our cue is that's another sell point. So if you sold here, or if you weren't in, and then we broke the 373, that would be a place to sell, and then you'd be looking for a tag of the 50 down here at 370. Let's go to the 30-minute chart and show the exploded view. The recapture of 378 was a real nice unidirectional move for you if you bought that. No shakeout candles, pretty much straight up to resistance, and then it rolled over. So there was a good chance there to get $3 on the way up and $3 on the way down, even if you didn't tag the absolute levels. Maybe you got 4 or 450 or 5 out of it. That was a real nice day of trading on the 30-minute chart, or 15, whatever you wanted to use. So today, key off of that 378. Watch these prior lows. If those are taken out, we got some support down here at 371. And remember, 370 is the 50-day moving average, and that would be a target on a breakdown. Cues. Maybe a little harder. We didn't have the levels really lined out here that great, but once we recaptured the midpoint of the channel, could have used that as a buy point, and then you got a run right up to the top of the breakdown candle. And remember, when there's been a breakdown, here was the breakdown, the gap down, a very important level is the top of the breakdown candle. and that's going to coincide with the gap. And you can see here on the run up, it hit the wall at the top of the breakdown candle and at the bottom of the gap, and then it came right back down at the end of the day. So there was an opportunity there. Even if you didn't catch the run up, you could have been keying off of the gap, and you could have said to yourself, okay, you know what, this is a fib bounce. I'm going to let it go as far as it wants to go. If it breaks above the breakdown candle into the gap, I want to get long for the gap fill, a one-day event. But if it gets rejected at the bottom of the gap, I want to get short with a stop just above. And that would have worked out fine. That would have been, good, solid, active trader thinking. And here you can see it on the 30-minute chart of a very nice, you had your levels here at 322. That was a buy point. That was a recapture of these lows. Moving on up to the top of the bottom of the gap, top of the breakdown candle. He had really 3 touches here on this candle, and this candle. Could not make any progress. Whenever you see multiple candles tagging an area from below, can't get above. Good objective place to try a short. If you get stopped out, you've got a paper cut. If it lets go, you got a gravy train. And that's what happened. And even if you didn't catch it here, when it lost 325, that would have been a place also to take an objective short. IWM has not been doing much during this turbulence. There was, I suppose there was some trades you could make in here, but it's been toggling between 212 and 210. I really think the trade, if the market breaks down, is 207 on IWM. A break below 207, I think you find 204 quickly, and below 204, I think with this big void here, you're going to come down and find 200 relatively quickly. Notice that the 20 EMA is at 207 and the 50 is at 195. We'll see if it gets all the way down there, but if SPY and the Qs are finding the 50 EMA, there's a chance that IWM will as well. And I want to make a point here that I saw some discussion on the internet, of course, related to these the GameStop and all that stuff. GameStop, AMC, and a lot of these names, they're in the Russell, right? They're not in the S&P 500 or the NASDAQ. They're in the Russell. So where GameStop was a pinprick on the Russell when it was $3, when it was 500, it's making some noise inside the index. And remember, you've got all these funds that track the IWM. So when GameStop goes from $3 to 100 to 500, these indexers have to buy, because now GameStop is a larger percentage of the Russell 2000 index. And if this is happening off, across a basket of stocks, let's just say 10 stocks of these short squeezers over the past several months, a measurable portion of this IWM run-up may have been due to these short squeeze stocks. So if regulators or brokers pull the plug on these names and these parabolic moves collapse, you may see a move in the Russell occur to the downside because they're selling all these names, the indexers. So the programmatic buying or selling based on these outsized moves on these basket of short squeeze stocks, Bed Bath and Beyond and BlackBerry and these kind of things. We may see a move coming out of IWM that's disproportionately affected by these names. So I'm keying off of 207, and I'm going to be ready with a short if we break below, and look for it's in this down channel here, but I really think 207 is the level where you would get some acceleration to the downside. And that little factoid about the short squeeze is just something to file away. You got to see it in price in IWM to make it tradable. Facebook, terrible price action since their nice report the other day. It was down this morning, but I'm not sure exactly where exactly. We had the gap up the other day. We're down testing that. 266 is your pivot today. If they recapture that, I think you can be long. You've got a gap here that's yet to fill. 260 would be support down below. So you can play these levels. But this is, horrible price action, to be honest. This was the pre-earnings run-up, and this was the post-earnings rug pull. So watch for a gap fill today. Watch for a recapture 266 if the market gets it together and Facebook participates. Above 266, you can look for 270, but below, I think it favors a gap fill down here and possibly a test of 260. Apple is down this morning. 138 is your go, no-go level on Apple. If it can recapture and hold, you can look back for 141. But yesterday, we opened down here. We came up to fill the gap, right? And then it just reversed. That's bearish price action. And if we stay below 138, your thinking should be fake breakout, false breakout. Here was the breakout pre-earnings. I think that was pre-earnings. We certainly had the run-up into earnings. And then it has since given it all back. And, once you re-enter the prior trading range, then your natural target is the next level down at 134. And then there's a gap below down to 132. So in my mind, this 138 is a really, really important level. And if this morning, say we gap lower and they rally it back up to 138 but can't take it out, then you've got a nice level to initiate a short with a stop just above, because I think this is a real important pivot point. If the bulls can reclaim it and save this breakout, that'll be very positive. If they can't, it'll be just as negative, and the bears will be in charge down to 134. Tesla, gap lower. They rallied it up to this 845 level. And we've got this large volume over price resistance here, and I guess that's where this 845 level is coming into play. In between 830 and 845 is probably the chop zone. I think you can be long against 830, but below 830 favors a move back down to the bottom of the box. And if we were to move below this 800 level, then again, that makes all of this look like a big topping pattern, because then you're back into the soup, and with a lot of gaps below that need repair. So if you weren't really active in Tesla and you were willing to give up this $30 between 830 and 800, you could say to yourself, you know what, I'm going to play the long game. I'm not going to try and, game this chop up here. But if we lose 800, we've got an $80 trading range. A break below a trading range means the measured move would be 720. That's worth playing for, right? So if you lose 800, you could initiate a short with a stop just above and play for 720. At least, fill a couple of these gaps down to 730. It doesn't have to go the extent of the measured move. But if you see Facebook breaking down, if you see Apple lose its breakout, if you see Tesla roll over out of its trading range, there's a market correction underway. So it'd probably be a good bet to play the downside there. Microsoft has looked good. 238 is your first level of support. As long as that holds, bulls will be in charge. If they start losing 238 and then 234 when this gap fills, the mega line on Microsoft is 230. That was the original breakout. That lines up to a prior level on the daily chart. Bulls, if they give up back to 230, that's fine. It's still in an uptrend. There's a pullback to check back to the breakout. But if they lose the breakout, if they lose 230, then in my mind, bears take control and would probably push it back down to 226, 222 on a failed breakout. Amazon, the free 50 club, opened below 3250 yesterday. We recaptured it. That's your buy level, up to 32.95. For all intents and purposes, there's your $50, 45 to be exact. Came up to a well-defined level, 32.85, 32.90. Rolled right back over, and there's your free 50 on the downside. So 50 on the way up, 50 on the way down. Thank you very much. There's my $100 for the day. Of course, it's not that easy, but these $50 increments have been working like a charm for months. So use them to your advantage. Today, pre-market, we were down here at 3,200. So again, predefined level lining up in the pre-market as, support. And then you can play off of that for a potential gap fill higher. If the market falls apart and price loses 3,200, you get short, and you got this gap all the way down $80 lower for a gap fill. So that could set up for a nice trade if the market shows some Friday weakness today. Google, very much like the other stocks and indexes we looked at, recaptured this 1835. That was a buy level. Ran it up to the top of the breakdown candle here, top of the gap, couldn't make much progress, rolled back over to take half of that back. So I think today, I haven't looked pre-market, but 1855 looks like a good pivot level. And certainly, if you lost 1835, 1840, you got $20 of downside there. And you've got this prior low way down at 1800. If price decides to check all the way back, that would be a good move for you to capture on Google. Netflix still in bearish mode after earnings. Big pop, gave it all back. Yesterday, reclaimed 535, came right back up to resistance where this cluster of prior lows were, could not make progress, and rolled right back over. Today, 535 is your pivot. If it can hold that and the market stabilizes, I think you can be long. Otherwise, I think you can be short with a stop just above. Look for this gap fill and then look for a retest of this prior low at 515. And if the market gets really soft on a Friday afternoon, which isn't the weirdest thing in the world to contemplate, you could get this gap fill all the way down to 500. So that would give you, a $35 move, which is nice on a Friday afternoon. And remember this, it's Lotto Friday. And if you've got a little daredevil in you and you've got some discretionary funds and you see a breakdown of 535 and you get a sense that, hey, this market's going to fall apart and it's early in the day, you can get a weekly option that expires this afternoon. And if you get a flush, you can make a lot of money. Now, the prudent trade is to go out in time, next week's expiration, and get that strike, because any kind of if you've got stuff expiring today, any kind of hesitation, any kind of reversal, it's going to whack you real fast. So I would, caution you about those strategies. But if you're comfortable with it, if you've got some money to play with, money you can afford to lose, sometimes it's worth a try, especially if you get that unidirectional move. Okay, let's wrap it up here, guys. I'm just going to put out a video today. I'm not going to do a blog post. I've got some things to do here this morning. But anyways, fall is back. Watch the Friday afternoon flush with futures down, heading into a weekend with all this short squeeze stuff. I wouldn't be surprised if some bigger players decide to take some more risk off. But that's all talk. Go level to level. Try not to let your preconceived biases of what may or may not happen today influence you greatly. Watch price action. It will tell you if price is stabilizing and rising, be long. If it recaptures levels from below, you can be long with a stop just below. But if the market rolls over and these key pivot points are lost from above, you can be short with a stop just above. And remember, if you're wrong, you got a paper cut. Honor those stops. But if you get a move in the direction that you were planning, then you can trail your stop. You can play it however you want. Whether you want to carry that risk over the weekend is up to you. I think with volatility over 30, makes it real tough to be, have a ton of long exposure. That can spike to 40, on Sunday night for God knows whatever reason. Be careful with your long exposure. It's fine to stay in core positions. It's fine to stay in core positions with a hedge. Maybe you want to get some NASDAQ puts if you're loaded with tech, just to hedge out some downside risk if you want to hold your long names with some duration. So take that stuff into consideration as we head into the weekend. And I will do my best to get something out towards the early afternoon to kind of assess where we're at, especially if the market starts moving. Okay, if you're new to the channel, I really appreciate your time here this morning. If you like what you've heard and you think it'll help you in your trading, why not subscribe? Hit the alarm bell. You'll get a notification every day of the content that I publish. Jump over to the show notes. You can visit the blog site where there's a lot of interesting and helpful articles on trading psychology, trading tips and tricks. Also, you can register for my content there where you'll get everything in a nice email each and every time I publish content. That way you won't miss a thing. And you'll also get an invite to our trading room. We've had a ton of new folks joining the trading room. They're loving it. Lots of idea generation, lots of call outs during the day. Stuff I would miss, honestly, on my own. People are out there bird dogging setups that they're seeing with a real attitude of camaraderie and helping each other win. And I love that. It's a great environment. And if you're looking for a community to join, I can't think of a better place to hang out. So please do that if you're interested. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a great start to your trading day today and finish the week strong. And have a good trading day. Talk to you soon.